right, good day, everyone, and welcome to the session. Today's session we're talking about is vision to action. How does manufacturing become more of a powerhouse industry, a sector for emerging countries and economies on our continent? We often hear a rhetoric towards value add, beneficiation, manufacturing, industrialization. But how do African countries start to move a needle really and start to industrialize their economies and not be, and their growth models not be determined entirely by commodity cycles? Before I introduce the great panel we have over the course of the next hour or so of conversation, I just want to set the scene. And I put together a couple of slides just to provoke some thinking and nothing new, but just to set the tone of where we are currently in our continent and where ultimately we need to be. So stating the obvious, this is a slide of showing the resource-driven business models of African countries, the lack of diversification, the built-in risk, if you will, that we have being exposed to commodity prices, very volatile at times, commodity prices and commodity cycles, particularly for western part of the continent, which is predominantly oil-driven. If we start to think about looking at Africa from a comparative perspective, there's the average globally of manufacturing value add to GDP of all countries globally is roughly 18%. So any figure above 18%, you're above the median, above the norm. Any figure below 18%, you're a relative underperformer in terms of manufacturing value add to GDP. As you can see from this very simple chart, is the majority of our countries across the continent are below the average, and the Sub-Saharan African average is a woeful just breaking double digits, just above 10% of total. I did a simple exercise and I argue, why is manufacturing important? Well, a number of simplistic reasons. Firstly, I don't know any economy, any country in the world that has succeeded without industrializing first. The second factor is that manufacturing, there's no sector, I would argue, that like manufacturing, that is able to create structural employment, embeds intellectual property in an economy. As it starts to scale, results in the demand for services. And as services grow, thus the economy becomes more ultimately self-sustaining. I did a very simple exercise, looking at countries of high manufacturing value adds to GDP and those with very low manufacturing value as GDP. I contrasted that to the Gini coefficient, i.e. high Gini means very unequal societies, low Gini, more equitable, more equal societies. And it's no surprise on the left-hand side, you can see countries with high manufacturing value add with very, very good, relatively speaking, good Gini coefficients and more equality. In resource-driven economies, predominantly, you find that countries have almost baked-in inequality because of a lack of ability of the rents from commodities to disperse in a more wider fashion throughout the economy. The point being, resource-driven economies have baked-in inequality by and large. I looked at exactly the same data, but represented differently, and saying that if we drive manufacturing, we ultimately address the burning issue of our time, which is inequality, not just between or within countries, but particularly, arguably more importantly, between countries as well. And we're seeing that sort of top left block is top left part of the chart, sort of more socially stable, politically progressive countries. Towards the bottom right, you have far more inequality. South Africa is an outlier in this case, where we've had significant hemorrhaging of manufacturing in the course of the last generation or so, and have moved down from roughly 23-24% of GDP generation 20-25 years ago to where we are today, barely 12-13% of MVA to GDP. So the point being is, how do African economies start to think about deepening value chains, widening supply chains, and ultimately capturing their share of global manufacturing? We see the similar trend taking place in Southeast Asia. Countries like Thailand, Indonesia, Vietnam particularly are certainly standouts in terms of very successful in attracting manufacturing and deepening the value chain in their own economies. the question is for Africa, where are the Vietnams of Africa? How do we start to industrialize our economy? And that's sort of a starting point for the conversation. So I have a number of excellent guest speakers for the course of this conversation. Thank you very, very much for joining us. I know how valuable your collective time is. In no particular order, I have Rosetta Mawape Chabala, who is the Managing Director of the Metal Fabricators of Zambia, ZAMEFA. Rosetta, thanks for joining us. I have Chiboni Evans, the Chief Executive Officer of the South African Electrotechnical Export Council. Dr. Kamal Gachichi, the Exec Director of Gearbox. Francisco Betty, joining us from Geneva, who's head of shaping the future of advanced manufacturing and production from the World Economic Forum, which has been doing some fantastic work on all things industrialization for many, many years now. Ali Angula, Managing Director of Leap Holdings from Namibia. Ali, thanks for joining us. And I think my opening question perhaps is what I'd like to say is the format as follows. I'll give each one of you, say, 3 minutes from talking about manufacturing, value add, industry, the state of industry from your own perspective, be it a country perspective, be it a sector perspective, be it your own company's experiences. Ali, coming to you first. Ali, you sit in Windhoek in Namibia, the country which, again, South Africa has the dominant share of manufacturing in the region. But how do other smaller economies, such as Namibia, in the region, how are you thinking about being very proactive about driving domestic value add, attracting domestic and foreign investment in the manufacturing sector in Namibia? What are your observations, please?
Thank you, Doc. So Namibia sits in a very unique position in the sense that it's a very large territory with a very small population and sitting in a very spoiled position in the sense that for the past 30 years, we haven't been able to de-link ourselves from, the South African economy in terms of dependency, where we've gotten, to be in a very comfortable position where it's quite easy to import and transport things in from South Africa. And then also add on to that, this whole SACU arrangement in terms of revenue share. So versus where, you are incentivized as a local economy to get into manufacturing, we have tended to rely heavily on the SACU revenues, which encourage manufacturing outside of Namibia and more in the South African economy. So it's been quite a struggle to just try and de-link ourselves. But I think the conversation has started to change recently because we've now gone through, we're going on to 5 years almost, where we are, as an economy, trying to recover from a deep recession, which has been largely brought on from, again, reliance in terms of sort of, economic spend from our Angolan neighbor, which has got a large population, was bringing quite a large of foreign currency into Namibia, with Angolans coming to buy into Namibia, with Namibia being sandwiched between Angola and South Africa. And obviously with the oil price crash here around 2015, we haven't seen a recovery in that consumer spending. And that sort of made us realize that we cannot continue on the path that we were on in terms of just, reliance in terms of consumer spending that's coming in from neighboring countries, reliance in terms of South Africa, in terms of our imports, and largely things that have been manufactured in South Africa. So recently there has been an initiative that has been to say, how do we encourage local manufacturing? So the government has come up with a strategy called the Growth at Home strategy. We are still to see traction, and that has now been backed in recent months, as early as 2 months ago, with the Buy Local campaign that has been kicked off by government. And we've seen for the first time in a long time a very active Minister of Industrialization who's been going around the country, encouraging people to buy from local manufacturers. And then we've also seen where, especially with COVID, where we've now been encouraging local manufacturers, especially textile, and that's the industry that I'm in when it comes to manufacturing, to get local local apparel manufacturers to actually do, the basic things like masks. whereas, we don't have to import those basic things. And that's given a little bit of revenue and a little bit of momentum in terms of, well, if we don't have this manufacturing base, we will not have products to consume. So it's an interesting space because there is now a realization that without manufacturing, we really will not get to a place where we would like to get as a country.
Ali, thank you. Rosetta, coming to yourself, is you're in Zambia, and I'm sure many similar challenges. I don't want to direct you too much away from your opening remarks, perhaps, but many countries and regions, South Africa included, we have binding infrastructure constraints. Think power, for example. Just maybe you want to mention also briefly on sort of how infrastructure, both hard infrastructure, think power, sort of road, rail, etc., but also softer infrastructure, think the provision of services and service efficiencies. How does that harm or support your business in Zambia? Rosetta?
Thank you very much, Doc. Actually, you ask a right question for Zambia because we are landlocked, or we call ourselves now a land-linked country. And in a landlocked country, all those kind of things that infrastructure related actually come to a fore. If you look at a country like Zambia, where most of the inputs are actually dependent on other countries. So we're actually importing quite a lot of inputs for production. So forget about the copper, the industry that I'm in. We obviously have a comparative advantage. We are almost the second biggest producer of copper in Africa. But for the rest of the manufacturing sector, really they depend on imports to actually produce. And infrastructure has been quite an issue. So let me tackle infrastructure on two levels, really, that has been the biggest issue and the contributor to whether you make it in manufacturing or not. If you look at us importing a container from China, for example, it will be costing you around probably 4,000 or so to get to Dar es Salaam or to get to Durban or even less. But for that container to leave Dar es Salaam to Zambia, it basically multiplies by 2 the cost, because now you're putting it on road and then bringing it. So it's cheaper on sea, but to bring it on road has quite been a challenge. And you're not just looking at the cost of the transportation itself, but it's also how good that road is. Are you going to get your products in another 4 days, or is it 2 weeks? Because the road itself is not in a very good condition. But in between that infrastructure, you will then find borders, again, which are inhibiting quite good trade to really happen. But also when you look at infrastructure in terms of intra-Africa trade, it also actually, again, brings in its own unique challenges. And there I can maybe draw on an example within Zamefa, which has really very few issues when it comes to importing things. But when it comes to us exporting to African countries, which we are doing, we're exporting to about 14 African countries in terms of copper road. It's a mission to take anything to Ethiopia. I mean, I have to take something through Dar or through Kenya and offload it on the ship, and then that's when it goes to the Horn of Africa. By the time the product, if you're talking inlet wire, for example, gets there, the thing is disintegrated, they can't really use it. So it's been quite a great challenge when it comes to infrastructure issues, and I think that has to be addressed. And that's on the hard infrastructure. But I mean, look at our connectivity in Africa. Again, just to communicate, just to get things done from the soft side of infrastructure proves to continue being a challenge. And if those services are supporting services for manufacturing, no wonder we are seeing that countries are struggling to pick up, to really be efficient, to have economies of scale, to beat the imports, for example, on price. Because even copper industry in Zambia, we can export raw copper to China, and we should come and compete on finished products with China. It doesn't make sense. But of course, it will make sense when we go into some of these issues that we're talking about of infrastructure, that then challenge you in terms of how quickly you can produce something and how cheaply you can produce a product.
Thanks, Rosetta. I'm going to come back to the sort of African Continental Free Trade Agreement later. It's a very valid point you raised. Can I jump across to Kamau? Kamau, you're from Kenya. You run a organization called Gearbox, which is really a platform for small startup aspirin manufacturers. What's the view from East Africa? I mean, East Africa seems to be, again, Rosetta's used the word landlocked, land-linked, but East Africa is more sort of, seemingly from Kenya's position, seemingly in a far more sort of comparative geographic has a positive, constructive sort of advantage there. What's your experience at manufacturing and aspirin manufacturing in Kenya currently? You're on mute, please, Kamau.
Yeah, thanks very much for asking. So I guess the East African economies in general, Kenya has had a special place historically. So we sort of were faster on the track of industrialization than most of our neighbors, which meant that many of the industries that were set up early in the 70s, especially, and the 80s, had the entire region as a marketplace. So you've got 5 countries that are part of the East Africa community, and a few others that we have road access to, and so on. And so we were able to grow our manufacturing base fairly considerably. We were between 15 and 20% of the economy was manufacturing. And what's been happening recently is that many of our neighbors have been very actively developing their own industries and competing quite successfully against the former suppliers of manufactured goods from Kenya. And so currently our manufacturing in Kenya as a percentage of GDP has dropped to just below 10%. And so we're suffering a little bit of a decline in the dominant place that our manufacturing sector had in the past. And so we're actively trying to sort of be more competitive. And there was, I guess, a fair bit of complacency that had drifted in over those years. And in a sense, that's a good thing, because it means we'll be able to build up our efficiencies. But there are structural challenges. For example, the cost of energy, which is quite expensive. The transportation networks have been improving recently. We've laid a rail through Chinese loans quite recently, which is a whole topic for a whole hour. I guess we could talk about that, but suffice it to say that it's helping, broadly speaking. But I think generally speaking, it's critical that we all, as countries on the continent, as you very well put in the beginning, industrialize. I mean, there's been a lot of debate that we've been hearing from especially Western countries, that perhaps the world is now in a post-industrial era, and that services, which many of our economies have seen a much larger percentage participation from services over the years, and maybe that we should be focusing on tech maybe and on services, tourism, and so on. But I firmly believe, and on the basis even of my own career, as you said, I run a manufacturing center, a center for the promotion of manufacturing here, that we need to be able to produce a significant percentage of what we consume. And so one of the things that we're really pushing, and this is really, it's been emphasized much more since COVID struck. I mean, before COVID, it was a nice sounding policy: buy Kenya, build Kenya. And I heard the Namibian presenter make the same kind of a comment. And I think a lot of our countries are trying to focus on that. But there hasn't been any real effort in putting into place the mechanisms necessary to make this a reality. But with COVID, because of the disruption in global supply chains and so on, we were forced to look inwards. A lot of what was expected to be coming from China, which hitherto was the factory of the world, wasn't coming in anymore, and so on and so forth. And so there's a principal concept that's really being talked about a lot. And I'm at a workshop right now. Actually, I just stepped out for this, and this was repeatedly said, that the government is the largest procurement unit in any country. And if it could lend its own procurement for, in a sense, a protectionist sort of let's just say, incentivize locals to be able to supply what the government requires. And then where it isn't possible for the quality of what's produced locally, or maybe the fact that whatever might be required isn't produced locally, then we have some sort of interministerial effort with the ministries of education, Ministry of Industrialization, and whoever else is necessary to build the various parts of the economy necessary to make possible this competitive supply of what's required. And, you know, this brings in questions of economic complexity, this wonderful assessment tool, the index that is developed, I believe it's at Harvard, where you're looking at what it is that you can competitively produce in your country and even export out of your country as a nation. And we rate very low, of course. And there's work that we did. I'm part of Francesco's team, actually, at the World Economic Forum. And so when I look at the kind of analysis that we did, and I'm sure he'll talk about this, the country readiness for the fourth industrial revolution, again, taking the context that we're working in here, it's not the same as it was when Asia was developing. Africa is developing in a pretty different world, actually. And the rate of growth of technological advancement is higher than it's ever been. And so our readiness is very low as a continent for this fourth industrial revolution. So trying to understand what it is that we need to put in place. And I think there is an element of protectionism that will be necessary, because you don't just wake up and start competing with Germany or even China. You know, you've got to be able to build up this capacity. And I think human resource development is extremely important. When I studied I was fortunate enough to study in the West, and many of my colleagues, people in my classes were from Thailand and Malaysia and some of those countries that you mentioned in your introduction. And they weren't really there through, like myself, my family's effort or friends and so on to get me to have this education. They were there by government policy, saying that we need to develop a steel sector, or we need to develop some electronic space. And so we need people to study in those countries where they're leaders in these areas. And this is how many. So, you know, some real thought and planning into what the human resource development needs to look like in order to be able to sort of take a position of well, being able even just to meet your own needs, but hopefully even export. So I'm seeing a lot of talk around this, and we in my space, our work, we're a nonprofit, and our idea is, I've taught at the university a long time. I taught engineering. I've seen a lot of good ideas go nowhere. So there's this lack of an ecosystem that's necessary to spur innovation and to move from an idea into the marketplace. And so one of the things we identified is the inability for innovators to be able to make a prototype, because there's a certain capital investment necessary in terms of machines and so on for you to be able to do so. So we're creating collective access through membership, a little bit like a gym, for people to come in and use machines that they wouldn't normally be able to access and develop products, and then see whether we can help them to get the products in the marketplace. And going back again to this report, the country readiness, the World Economic Forum report, shows that, you know, talent and innovation and so on, when you're trying to build up or increase your economic complexity index as a nation and to scale more, talent and innovation are really two of the drivers that you have. There's many others, that government policies that are necessary. And unless those policies are in place, efforts like mine will end up being, you know, relatively futile, because of what else is necessary in the environment to make it work. So maybe I'll drop off there, but I guess that, in a sense, hopefully gives a bit of a picture of what's happening in our part.
It certainly does. Come on, excellent. Thank you very much. Appreciate that. Chibone, coming to yourself, is that one of the phrases Kamal uses is ecosystems, and taking from Ricardo Hausmann's economic complexity theory is sort of was mentioned as well. From a South Africa perspective, I mean, how are we doing? I showed that figure earlier of significant hollowing out of our economy. What are you seeing amongst your members in the Export Council?
Thank you, Martin. I think maybe to start just by giving a bit of background in terms of the representation that I am sitting here on behalf of. So I head up an organization called the South African Electrotechnical Export Council, which is a public-private partnership between the Department of Trade and Industry and the private sector in the electrotechnical space, which covers ICT, telecommunications, electronics, and I also am part of another grouping of export councils, which is called the Engineering and Technology Grouping of Export Councils, which I co-chair. And that grouping of export councils covers the sectors in South Africa, which are rail, steel, built environment, and and ourselves, electrotechnical. And the mandate of the engineering and technology grouping of export councils is to try and see how we increase African business participation in African infrastructure projects, and thereby ensure we can sustain or create, sustain, and grow our manufacturing bases in various African countries. So it was very interesting listening to our counterparts in other countries talking how every country is trying to increase their local content, but we also need to look at very clearly how we increase African content, not just individual country content, but also African content. And so from a South African perspective, what we've been looking at and the approach from the Department of Trade and Industry has changed quite significantly in terms of how South Africa operates in the rest of the African continent, from one where we are merely exporting goods and services into the continent, but more looking at how we participate with the rest of the continent with what we're calling an investment-led approach. So when we go and engage with our counterparts in various countries, we're looking not just to merely export product, but to see how do we create local value addition in those countries, in the various sectors and spaces that we operate. So that's the one point that I wanted to actually raise in this particular panel discussion. The other one is to say that I think as African countries as well, the other thing we need to be looking at is where do we create some regional centers of excellence in various sectors. So for instance, a number of years ago, South Africa made a conscious decision that we wanted to be the center of excellence for rail manufacturing. So from the government perspective, we then engaged in the Prasa Gibela program, where we're going to build 560 passenger rail trains over the next 10 years or so. We also then embarked on the Transnet 1064 to build 1,064 freight trains in the next 10 years or so. That will then create and fortify the rail manufacturing base in South Africa. But what that also does is that it makes South Africa as a manufacturing base where other African countries can then come and purchase rail stock from us, but also to utilize this as a space to train and skill up workforce and manufacturers for the rest of the African continent. So we need to be looking at those sorts of pockets of excellence that we can create in other parts of the world. I know that, for instance, some initiatives that the DTI have been working with have been in the agro-processing space. We've been looking at Zambia in terms of soya and groundnuts, in terms of how do we utilize and create agro-processing facilities there to try and see how we can export from there into other African countries and thereby talk to this much talked about Africa Continental Free Trade Agreement. So I think those are the 2 points. One is to ensure that we try and see where we get our pockets of excellence to create those manufacturing bases. And as Africans, we don't compete against each other, but create those pockets of excellence in different parts of the continent, and then we start trading a lot more better and freer with each other, and therefore activate our African Continental Free Trade Agreement more effectively. I think those are the 2 points that I'd really like to start on. Thank you.
Francisco, coming to yourself, just want to set you up here, if I may, for a second, tee you up. Is, you know, Kamal used terms like fourth industrial revolution. Chironi spoke about creating centers of excellence, ecosystems, if you will, a phrase also used earlier. There's also a sense, Kamal mentioned, sort of maybe post-industrial, you know, how do countries in the developing world really start to succeed without industrializing? Is that possible? How are you at the World Economic Forum thinking around and giving advice perhaps to aspirant developing emerging countries toward industrialization, when arguably industrialization has never been as difficult as it is at this current economic time in history?
Well, that's indeed a great question, and a lot has been said by my colleagues before indeed. Maybe a first comment is that the belief is that manufacturing will remain a key and major driver of economic development and growth and inclusive growth, but may not be enough anymore as it was in the past. So I kind of agree with Kamau when he was saying the more diversified your agenda, having an agenda that looks not just at manufacturing, but that builds on commodity exports, value add manufacturing, and services, it's probably what countries are starting to look at right now. Now, when it comes specifically to manufacturing, I think that COVID-19 brought, and we know all that well, unprecedented disruptions into global value chains, global manufacturing and supply systems. I mean, for the very first time, we saw disruptions happening not just on the demand or on the supply side, but on both sides simultaneously. Now, what that did also is that it helped us bring manufacturing back to the top of the global agenda. So I do believe that, what that has created, and it may be a window of opportunity, we don't know how big it is, but there's an opportunity to, pushing once again or further accelerating the industrialization agenda, not just in Africa, but globally. And that's quite interesting, and we should leverage that. Now, if you look at what happened over the past 6 to 8 months, there were some quite incredible things that we could learn from and that we can use to design that agenda for the way forward. First of all, I think that we all realized that it was possible to start making certain products. I mean, Ali, you were talking about the face masks, right? Can we empower textile manufacturing to start making what is relatively basic product, right? And make that locally. So there was a realization that, it is possible to make certain things. And of course, the level of complexity and value add can increase over time, but you need to start from somewhere. And that's great. But we also saw, great levels of innovation happening and new levels of innovation. There were companies who came together within specific ecosystem to assemble ventilators. And that was quite unique. And then the other element is that we also saw new levels of collaborations, and of course we were forced because of the public health crisis situation, but we saw new levels of collaborations in between private sector, government, academia, and civil society. And I believe that that's going to be another great asset going forward. Maybe the last point is that we are also seeing governments realizing that for that new type of manufacturing, those new levels of innovation, and those collaborations to continue, we do need new incentives. So we are seeing, significant changes when it comes to policies on how governments are approaching the world of incentive that they are giving. And maybe let me go back to the comment on the country readiness framework. That's a framework that we developed at the forum to try to understand how prepared countries are to accelerate the industrialization agenda and transition towards the future of manufacturing. It looks at 2 dimensions. You have the structure of production, which is literally the picture of manufacturing in a given country at a given point in time, how complex and unique your manufacturing base is, and how big as a percentage of the GDP. And then the second dimension is what we call the drivers of production. Now, when it comes to the drivers of production, and Kamau, you alluded to some of those, I believe that the most important thing is that we do need at the national and at the regional level a coordinated agenda around those drivers. We have seen a lot of scattered efforts happening here and there, driven by one ministry or the other. I think that the need for a coordinating agenda could make a huge difference. Now, what are those drivers? Technology adoption and innovation. We need to ease the access to technology. If we are importing technology that will help us accelerate, the way in which we are providing value-added manufacturing, we should find ways for that technology to be absorbed and disseminated in easier ways. We need to support investment that go not just into the financial system, but also into real productive activities. That's essential as well as we move forward. Skilling and reskilling. I mean, we see the world moving from economies of scales into economies of skills, and upskilling, reskilling, skilling our people is going to be an essential asset to be able to then move into more value-add activities in manufacturing as well. And then finally, I think there's something around the commercial relations. And there maybe let me conclude with 2 points. When we look at the future of manufacturing and if we look at the continent, I believe it can be driven by 2, let's say, through two main avenues. One is the internal market, and for that you will need to look for as regional as possible market. That would be an amazing incentive from global companies to establish their manufacturing base in Africa. The second one, it's the export-led market, for which there are already countries in Africa who have a huge competitive advantage. The future of manufacturing is not about technology everywhere. You may still have a labor competitive advantage in many areas. So for both of those, you will need new trade policies, you will need new commercial agreements, you will need to open up. And I believe that, having that maybe coordinating agenda across all the different drivers that went from technology adoption, scaling to infrastructure, and then developing and further strengthening international relations can play a major role, especially now that we have, as I said before, probably a unique window of opportunity to take the industrialization agenda to a new level.
Francisco, great. Thank you very much. I want to get to the detail to specifics now. And coming to yourself is, we look at examples I'm seeing across the continent emerge, using Chiboni's comments of, she said, sort of pockets of excellence. We see Ghana this year, the worst year ever, 2020. Ghana's creating an automotive ecosystem. We've seen announcements by VW, by Toyota, and another OEM pending, I'm told shortly, investing in manufacturing, SKD at this stage in Ghana and seeking to scale. We see the special economic zones. I visited quite a few in Ethiopia in recent years have been established, largely garments, textiles, and light industrial equipment. And these seem to be functioning incredibly well. These pockets of excellence are kind of emerging. Which countries, Kamal, question to you, which countries are putting, as Francisco said, putting necessary incentives in place, the necessary policies, the support of infrastructure to create these new sort of very focused centers of industrial aspirational excellence, should we say? Kamal, over to you. What are your observations, and where else should we be looking here?
Yeah, I would agree with both the examples that you gave, and more so Ethiopia from the point of view that they have a sort of a command economy. They've got a government that really controls, what happens in the marketplace to a large degree, which I think is very helpful and can be very helpful. We've seen the examples of China, for example, which has, very deliberately grown state corporations and then pushed them in with a lot of, taxpayer support and so on into the marketplace, giving them sometimes an unfair advantage, but in a sense, maybe in today's world, that's the kind of effort that needs to be made. And I think one of the problems on the continent is that we're 54 countries, where so many, it's the balkanization of the continent, each with borders, and that's a barrier to, trade very often, many languages, obviously, but policies as well that aren't necessarily all aligned. And so, when you find what also is very needed, FDI coming to look to see where to invest, that's something that works against us. And so I think having a country like Ethiopia with its size, about 100 million population, Nigeria, very much so as well, these are demonstrations that scale is important. And I think hopefully the free trade area that's being worked on very actively will make us look more and more like a single market in certain important ways, so that more of that investment can come in with less risk associated with the balkanization of the country. I think that when we look at those centers of excellence, we've seen, for example, in Ethiopia, as I said, they're looking at, they've got this military company that's manufacturing vehicles, and they've been able to make this very heavy investment in these huge presses where you get these coils of sheet metal that are converted into car bodies. And so you can actually make the shapes of the car bodies in their factories. And that militates, that kind of investment has been quite a barrier to really setting up auto industries on the continent. Of course, the small market size has also been a huge barrier, but that's growing. And so I would think a kind of an Airbus model, like in Kenya, we might want to focus on something related to, say, the electronic side of the vehicle, the PCBs that are necessary, and so on. I know that Rwanda is looking very, very deeply into battery technology. And in the East African region, we have all the minerals necessary for, the coltans and the rare earth elements and so on. And, with a long-term view they've got an investor right now. It's a Japanese company that's doing the batteries in Rwanda. But over time, the inputs into those batteries can be sourced locally. And perhaps going back to this whole Airbus idea, the car body can be made in Ethiopia. Maybe the batteries will come from Rwanda. And that sort of thing, I think, is very important thinking. And it has to be led by the leaders. It has to be driven by the lead. Private sector, obviously, is where it really happens. But when you have policies, when you have very progressive leadership like Paul Kagame, and Dr. Abiy in Ethiopia, then you start to see things moving quite fast, in fact, which is really encouraging. And so those are the two. I'm sorry, I haven't really given any more than you actually mentioned in terms of examples, but I do agree that those two really stand out. South Africa, I mean, it's interesting to hear what you said about the shrinking of the manufacturing base. We in Kenya have a state corporation looking at steel, for example, and we want to set up an integrated steel mill. So you're going all the way from the iron ore to the downstream products. And very deliberately, there's been a very strong push and a lot of lobbying that I've been a part of to leave it as a state corporation, so that the profit that is not the driver for the policies made. And I'm not sure, but from what I've read, I think South Africa's auto industry or the steel industry might have suffered from market forces or maybe labor influence, meaning that the advantage that they had feeding the auto industry with the steel that they required meant that some of the companies, like I think VW, moved their focus from South Africa to Kenya, if I'm not wrong. So I think policies are really very important, but there's a lot to learn from a country like South Africa, which has been way ahead for historical reasons for decades, really, on the continent. And so trying to sort of learn from that.
I've got a tough question, maybe Chibone, coming to yourself. A lot of you have mentioned China. I was very fortunate, and I spent a lot of my formative years in China. I was a student over there many years ago, and lived in South Korea and Taiwan and these places, Singapore, and was able to, I think, Kamal, you spent some time in Japan. And you've seen the incredibly sort of super rapid acceleration of manufacturing in these economies, and a very, very deep regional value chain. But Chibone, question to you, and can we compete with the China price, which is now maybe more accurately called the Asia price in considering the regional value chain? We always say, Rosetta, you're talking about sort of copper and you manufacturing everything you do in Zambia, but seemingly the economics are somehow different in China, mass scale production, cheaper power, and even with the significant cost of logistics, transportation, China's still beating us. So Chibone, question to you as a South African industry and from where you sit, are you seeing South African cases of, can we compete with the China price, or is the is the game over? Chibone, any views, Chibone?
Martin, sorry, I think I hope you can hear me all. My connection is sometimes a bit unstable. I think we need to stop looking at the pricing from China, and rather looking at the total solution that we can provide each other as African countries from each other's countries. And I think that's a mindset shift that we had to make as South African business and South African exporters, because on price, we will not compete. But what we found is that on quality, on providing a total solution in terms of what we're trying to achieve, and I'm talking here about infrastructure projects, in terms of the developmental impact of our assistance and how we work with our fellow African countries. Those are things that we can do together as Africans that you cannot factor into a solution that is provided, say, by China or even by Europe sometimes. So I think we need to then start asking ourselves, and this is why I was saying, let's stop competing with each other as Africans and start actually looking at what it is we can do as pockets of excellence in various parts of regions and sub-regions and countries, and then start working towards activating and making sure that this African Continental Free Trade Agreement that we have all signed on to is going to be an effective instrument for us as Africans. A point that Kamal made, which I think is very valid, and I'm not sure who else made it before, is that as Africans, and especially as African politicians and leaders, we have to be consciously saying what it is we want to do for our countries, for this generation, and most importantly for the next generations to come. So I'll just give a very quick example or idea around some policy issues. So we know, for instance, that in 15, 20, 30 years time, electric vehicles are going to be the way that we're going to be manufacturing vehicles in the world. The vast majority of the raw materials for the batteries for electric vehicles reside on the African continent. We ask ourselves the question, what policies have been put in place now to ensure that we manufacture those components for batteries on the African continent, because the raw materials are on our continent? And those are the sort of things that I think we should be seriously and actively looking at now as African leaders, to make sure that we don't continue in 50 years' time doing what we've done, because 50 years ago is when we came out of colonial subjugation, and we still continue to do that. We know what's coming. We know electrification of vehicles are coming. Electric vehicles are coming. We are sitting with those resources, yet there's nothing, I don't see any policies anywhere that say this is how Africa is going to ensure that those resources are exploited to the benefit of the African continent. So those are sort of things that I think we should be starting to look at. China, yes, I understand is a bit of a threat, but I think we're slowly but surely getting over China, and we need to start looking at what we've got and what we can do for ourselves. And ultimately, because of, I don't want to go into the political reasons and everything, all the other reasons why we continue to use China, they'll be there. We can't get away from them. But I think we can compete with them on areas where they don't have a competitive or comparative advantage with us as Africans. So that would be the point that I would make on that. Thank you.
Joy, thank you. Ali, can I just bring you in here and being provocative and picking up what Jaboni talked about is, as I said at the very beginning, all our economies are very resource dependent, and our export basket is largely non-processed, be it agricultural, be it solid commodities or oil and gas. Are we not missing something here? Are we just defaulting to saying, well, we have the resources, therefore we should have a comparative advantage of doing something with them? Does that blind us from other opportunities? I mean, if I look back the last half a century, the most successful manufacturing economies have been those with zero resources, zero commodities. Think Japan, Kamal. Think South Korea. Think Hong Kong, Singapore, Thailand, by and large. Even Malaysia, beyond palm oil. Is this a mindset? Are we not letting our imaginations sort of conceive what is possible? Are we being too focused on resources? What do you think? And particularly in the context of Namibia, what would be the game changer for Namibia going forward?
Yeah.
On resources.
I think the resources game has made us lazy, especially from a Namibian point of view. I used to lead the energy and natural resources sector when I was at KPMG, and I recall we once wrote an article around, how is it that Namibia keeps featuring in terms of being the ideal investment country when it comes to mining, but we're not seeing the jobs being created within that sector. And it's because, it's quite expensive to mine in Namibia, and what companies had done is they had gone and invested in so much technology that jobs were being shed in the mining sector. And there was then research that was done by the Chamber of Mines that said, as an industry, we're consuming internally, we're consuming about 16 billion of product. But a lot of the 16 billion of the product that the industry is consuming is all imported into Namibia. So we've got opportunities, not just from, this constant conversation around value addition, but the products that actually go into the manufacturing process. And it was actually quite interesting once we started to dig deeper into that as to why we can then not encourage local manufacturing of those items that are being consumed in the mining industry. And what we found is that there just wasn't any interest because, again, it was easier to just import those products in. And then the constant conversation that once we get this manufacturing up and going in Namibia, the products are going to be more expensive. So the resources mindset, it's really made us lazy, because once you can say, you know, you've got the resource can be extracted, you've got stable policy in terms of once the investment is made and the investor can get their investment back, you don't have this restrictive exchange control, so there's always a good return on investment. We tend to gravitate towards that. And then we went into this entire conversation that's taken up, I think, probably 10 years worth of time in terms of moving us to a manufacturing journey, where we were then trying to force the mining companies to go into value addition. It's taken us 10 years to realize, but a miner is a miner. They extract the ore, and they're actually not interested in the manufacturing of whatever needs to come out of that product. But in that conversation, we've lost 10 years of policy space. And it's gotten us, I think, it's a lazy mindset. And as the other panelists were talking, I was actually then, my mind quickly drifted to this whole thing of Namibia being a very vast territory. And one of the things that we have is the sun. And I can't imagine that as a country, we're not talking at this moment. If we think of the electric vehicle conversation that we've just had, to say this vast territory that we do have, how do we then use it? Where, for instance, we could then become the manufacturing center base for these batteries, because we've got the land for it. And also, how then do we possibly even explore further and say we've got neighboring countries that have probably got a larger manufacturing base than we do, but are constrained in terms of infrastructure when it comes to electricity. So how do we then get ourselves into a position where we can then export electricity from Namibia that is coming from the sun as an energy source into the likes of, you know, Zambia, into the likes of Botswana, into the likes of South Africa, which is, you know, constrained in terms of energy. So I think it requires that we think different and move from sort of this resource lazy mindset that we currently seem to be stuck in.
Thanks, Ellie. Good point. Rosetta, coming to yourself, many have mentioned the proposed, I see from January 1st, to be implemented, the hiatus in 2020, the African Continental Free Trade Agreement. From your particular business, you're sitting in Zambia, as you said, landlocked, hopefully land-linked, but the Continental Free Trade Agreement is held out by many, maybe naively, as a silver bullet for many things. What do you think? What would you like to see as a short-term gain coming from the African Continental Free Trade Agreement? What's important for your firm, for your company?
Well, I think that's quite a mouthful when it comes to the free trade agreement itself. But really, speaking specifically from my sector, where I'm coming from, and picking from what Siobhan has said in terms of centers of excellence, I think Africa suffers from each country trying to do everything. And we haven't really identified what we just don't have necessary comparative advantage in, but also competitive advantage in. What can we do competitively that maybe the other people cannot do, and therefore people can buy from us? And then the other country and the other countries also identify those things. But also something that I think inhibits the free trade area itself to even make progress is, again, what has been mentioned on this forum: local content issues, local preference issues. Everybody's calling for their government to only buy local. And we know that government is the maybe 50% buyer of any economy in terms of market. And we are all taking that 50% of our buying power local and expect that at the end of the day, we'll trade with ourselves. I don't think that's going to be viable, but we somehow sit together and talk intra-Africa trade and individually we go protectionist. So when we as industrialists are in country, we tell the government to close the borders. We tell the government to only buy from us. We tell the citizens and everybody else they should support local manufacturers, which actually is okay and makes sense. But I don't think it then makes sense when you then go and talk about a free trade area, because then it won't work. And I think that's where the failures come in when it comes to free trade area. So you got countries that somehow maybe would even appreciate the free trade area. They don't really have the market, even if they force the government to buy only from them. They would open their markets, and then they will try to see if they can source things elsewhere and try to sell whatever little that they're doing. And then you find the giants closing up. And that has been the game. The giants in the game are coming on the table and say, let's trade freely. And then their economies are completely insulated. You can't sell anything in there. And I'll be a devil's advocate. I'll take, for example, South Africa. Even though Zambia is comparatively and competitively advantaged in producing copper cables, for example. I mean, I sit at a plant that is just 60 kilometers. It has a mine that produces for me. So I actually don't stock any copper, for example. So my costs are quite lower when it comes to copper products, because I can ship 90 tons every day, if that's what I need. But that cable, to find itself in South Africa, is almost impossible. And why is it almost impossible? I mean, South Africa, through the Department of Trade and Industry, has their local preferences and local content issues, where the cable industry itself is insulated by maybe 90%. They've given the cable industry 90% they cannot import. So even though you wanted to go and sell to Eskom, Eskom won't buy from you, because Eskom has to actually respect that policy and only buy from the South Africans. And then we go on the table and talk about free trade area. So I think starting from there is where we need to unpack the issues. When we talk about free trade area, what are we talking about? Are we literally opening ourselves to competition? Can we actually afford the competition? For me, I've always said, look, some competition that we're even scared of is actually imaginary. I mean, even if I open myself to Nigeria, just getting something off Nigeria to Zambia is almost impossible anyway. So I may be scared today as Zambia to open up, but I'm scared over nothing. And that's why the issues of centers of excellence for different things that we have and the different capabilities of each country comes in. And I like what's happening in East Africa, Rwanda specific, that they're going into some niche market that not all African countries actually are at, and establishing that and become the excellent center of excellence for that. And they seemingly are actually succeeding. Most of the countries here, we are still agro-process based. If you look at Zambia, I think 30 to 40% of the manufacturing sector is actually agro-processing. And yet each and every country in Africa has a lot of land, a lot of light, good climate, so everybody can actually produce these things and is almost self-sustained. And so we can't really trade because we are all caught up in raw material kind of processing, which is basically agriculture, and we are not stepping out to go into all these you're talking about, electric cars or whatever it is, other things that even Africa itself can then offer outside Africa. We are only looking at us and looking at 1 billion. I mean, China, 1 billion people, yes, good gives them a good base to actually by far create any manufacturing base. But I think they have thought beyond 1 billion people. They thought of the world and they went for the world. We are thinking of Africa and not the world. I think Africa should change, not just to talk about the free trade area in Africa, but how that free trade area then attacks the rest of the world. Then maybe we'll be talking about something.
Rosetta, brilliant, thank you. Our time is relatively tight, so I'm going to ask each one of you maybe 30 seconds to conclude by, I'm going to pose a question to you. What's the real game changer for your respective sector or country where you sit? Francisca, maybe obviously not Switzerland, but sort of your views toward developing emerging countries that are in the room here today. Ali, can I start with you? What is the one thing that could really move the needle here for manufacturing in your country? What is that one thing? That's the question to all of you. Ali, first, please.
Yeah, I think for Namibia is using our greatest asset, which is I guess bestowed upon every country, but more in some countries, and we have more than sufficient supply, being the sun. And just how do we use that resource to build industry off from that resource? So how do we then build an electricity or energy export industry from that? And then how do we bring down our own cost of manufacturing? Because although we've got access to electricity, it's quite a significant cost, and probably our biggest cost when it comes to trying to get our manufacturing base off. So for me, that is one of the biggest game changers, is how do we use a natural resource where we're not having to really pay anything for it. We've got more than most of the countries of that resource. So that's, for me, the biggest game changer.
The future of energy, the future green economy. Thanks, Ali. Kamal, from where you are, what's your one thing? What's your one idea? What's the one game changer?
Yeah, that's a difficult question, because there's several that I could think of. But if I was forced, and I think I am being forced to just give one, I would lean towards some of the emerging technologies, specifically the Internet of Things. I think that there's very interesting use cases of the Internet of Things. In Kenya, we have what we're calling the Kidogo economy, which means a small economy. People would buy just a squeeze of toothpaste in the morning, just one squeeze, not the entire tube. And if you're able to use technology to be able to dispense small amounts of commodities and track it and charge using mobile technology for payments and so on, which we've seen happening, then you see huge expansions of certain markets where people now have access even to credit as a function of technologies, the convergence of these important technologies. And what we're doing in my own space, we've invested in surface mount technology, which enables us to make the circuits, because the kinds of circuits that you require for such IoT products is quite specific, and it isn't available off the shelf in China. So it presents itself as an opportunity where we might be able also to export these same technologies to other countries, and then go upstream and look at our minerals, so that the content of some of the components that go into those boards and devices could also be developed. So I'll probably just leave it there, but there's many more I could mention, as I said.
Oh, sure. Thank you very much. Chiboni, your one idea, one game changer from your sector or the country, perhaps?
Like Kamal says, there are quite a few, but I think maybe just to conclude is to say, as we're starting to look at how we develop and define our manufacturing base as Africa, we need to, or as Africans, we need to also take advantage of the fact that we have got a young population. They think very differently to the way that we do. We need to start tapping into their knowledge base and getting them to sometimes also assist and direct us. Because as I say, we're sitting here sometimes 50 years later doing what we did 50 years ago. And we don't want to have a situation where because we've been unable to tap into the intellect and the thought process of our young population, we've not been able to accelerate in the way that we should do. And I think just to re-emphasize a point that Rosetta made, that we should also be outward focused. Yes, African Continental Free Trade Agreement is important for us in Africa, but it should also be utilized to create those manufacturing bases that allow us to produce and manufacture goods and services that are required for the global environment. And the key, as just come back to my point before, we really do need to start seriously thinking about the resources that we have that are needed for 20, 30 years from now. Because if we don't exploit them, and I know, Ali, you did say, we don't want to have that lazy culture. If we don't exploit them, somebody else will. And my point is, as Africans, we need to start thinking beyond 10 years. We need to think 20, 30 years and put those manufacturing instruments in place now so we can supply that demand that's coming our way. Thank you.
Thanks, Chiboni. Rosetta, your last word. What's the one idea you have or one game changer you'd like to see in Zambia? You're on mute there, Rosetta.
My apologies. I'm saying, in fact, Siobhan stole something out of my mouth. Long-term thinking. I think that has completely been lacking. And if you're going to talk about a sector like manufacturing, unfortunately, it's a long-term process. You cannot plan for manufacturing for 5 years. You cannot plan for returns in manufacturing for 10 years. If you're serious about manufacturing, you will plan for it 30 years, 50 years beforehand, and then you will get there. And of course, we should stop focusing on the problem or on what we think is a problem, because what we think is a problem right now is we can't produce. I don't think so. I think it's the supporting systems that fail us even when we can produce something. So we must refocus and ensure that those blockages that make the manufacturing sector not succeed, whether from the production point of view or whether from the supply side constraint point of view, we must concentrate on resolving those, and automatically it will respond to the manufacturing sector setting off. What we have done in the past is grown and mourn. We can't produce good products. We can't produce sufficient products. We need investment in this, but we are not actually investing in supporting structures that will then make that manufacturing sector sustainable. And so what we have seen is investors come, produce very good products for that matter, but then everything else blocks them. Policies blocks them, infrastructure blocks them, this broke, and then the person walks away. So I think we must shelve the production side of things and go and look at what is supporting the sector, whether it's roads, whether it's rail, whether it's a soft side of things. And automatically, my belief is that then your manufacturing will smoothly take off and it's not supposed to be an issue.
Zeta, thank you. Francisco, last word. Your thought, idea, the real game changer for countries in our part of the world down here in Southern and Eastern Africa. What's your ideas?
Yeah, and let me build on what my colleagues just mentioned. I think that I do agree that manufacturing is a long-term game and play. And what we need now is a new generation of long-term industrial development strategies. And what is essential is for governments to develop those in close collaborations with the private sector, with research institutions and civil society. I think that if we look at those countries that were able to leverage manufacturing as a main driver of their economic development and inclusive development in most cases, they all had long-term, not just visions, but long-term strategies, which is the translation of the vision into coordinated and specific policies that allows them to move the needle mainly in 3 areas. I mean, one is technology and innovation. The second one is workforce transformation, skilling, starting from education, but going all the way to skilling and upskilling. And then the second one, infrastructure. Now, there's a question in the new context about what type of infrastructure you need, but you will still need to make investments in infrastructure. So if we can have coordinated long-term strategies that build on those 3 main pillars, I think that we will be setting the foundations for industrial developments in the years ahead.
Francisco and everybody, thank you very, very much. It's clearly manufacturing is not a policy switch. It's a generational play. And that long-term vision, that long-term, not just vision, strategy, but also Francisco implementation is what it's all about. I want to thank you all very much. On behalf of myself, Martin Davis at Deloitte, and on behalf of Manufacturing Indaba, thank you very much for sharing your views and your collective time once again. Much appreciated. Thank you.
Thank you.
Thank you.
Thank you.
Thank you very much.
Thanks.